ಕಂಗಳು ತುಂಬಿದ ಬಳಿಕ ನೋಡಲಿಲ್ಲ, ಕಿವಿಗಳು ತುಂಬಿದ ಬಳಿಕ ಕೇಳಲಿಲ್ಲ, ಕೈಗಳು ತುಂಬಿದ ಬಳಿಕ ಪೂಜಿಸಲಿಲ್ಲ, ಮನ ತುಂಬಿದ ಬಳಿಕ ನೆನೆಯಲಿಲ್ಲ ಮಹಾಂತ ಕೂಡಲ ಸಂಗಮ ದೇವನ. Very good evening, members. Today we have an live webcast Jnana Dasova. It is a 19th series. Expectation from Scrutiny of GST annual returns filed for 2017-18. It is going to be handled by very good knowledgeable resource person CA Jatin Christopher. Welcome you, sir.
Thank you, sir.
Dear members, let me welcome CA Jatin Christopher. He is qualified chartered accountant in the year 1996, specialized in indirect taxes. He is contributed a lot to the indirect taxation committee of ICI while implementation of GST, and he is a regularly resource person of ICI in various branches and head office also. He has been in practice since 2000, specialized in advisory and litigation matters in indirect taxes. He is a partner in JCS, and very members, I kindly note that when GST is start implementing, indirect tax committee of ICI worked a lot to the helping to the government. In that team, especially Bangalore members have worked very contributed a lot. In that, the key person, one of the key person is CA Jatin Christopher. So members, let him welcome on behalf of Bangalore branch and all members, viewers, on behalf of all of you, I wholeheartedly welcome CA Jatin sir. Welcome you, sir.
Thank you very much.
Members, bring to that, as I mentioned, the head office has restricted us to conduct the live webcast. We have limited to our live webcast series Jnana Dasova. From today, continuously 3 days we are having the sessions. Today is the session 19th session, live webcast session by CA Jatin sir. Tomorrow we are having the subject on issues in supply and deemed supply by CA V Raguraman sir. And day after tomorrow, 15th May, we are having recent changes in Finance Act 2020 relating to charitable and religious trusts by CA Dr. N. Suresh. These 3 days, today, tomorrow, and day after tomorrow, for Jnanadasa, very eminent speakers, CA Jatin sir, CA V Raguraman sir, and Dr. N. Suresh is going to address our members through this live webcast. I request members to pass on this information and make utilize of this live webcast. As you are all aware, this corona made us challenge. We CAs, we have to overcome these challenges and turn into opportunities. So today we have with us CA Jatin sir is going to address on expectation from scrutiny of GST annual returns filed for 2017-18. Members across the state and interstate also you are viewing to this session. I wholeheartedly welcome on behalf of Bangalore branch and over to Jatin sir for the starting the session. Over to sir.
Thank you very much, sir. Misunderstanding of the law, misinterpretation of the law, misadventure with the law. This has been the bulk of taxpayers who have filed annual returns for 17-18, somehow managed to get it through the door by the 7th of February 2020. And the small percentage of taxpayers who have missed all these misses and are very confident about their innocence or their understanding of the law, they too will not be free from challenge about the tax positions they have taken from the other side. Friends, please, let's spend this afternoon examining what one might expect when the department takes annual returns filed for 17-18 to scrutinize them in terms of section 61 of the GST law, perhaps take it up for audit under 65 or even an inspection under 67. Friends, we are not going to discuss today provisions from 61 to 65, but we are going to look at the returns that we have already filed from two perspectives, inside out, that is, look at the forms and see how it appears to the outside world, and look at these forms from the outside inward. These two perspectives I'd like to bring to our members this afternoon, and I'm very grateful to the Institute for having given me this opportunity. And I try and take this opportunity to bring something new and different, and rather than repeating myself over some of those issues we may have covered under other topics. Scrutiny of the returns already filed for 17-18 is an exercise that we expect is already afoot, but the action arising out of that scrutiny, we may start seeing it once the lockdown is lifted. I take it that members are very conversant with the forms, the table numbers, so we'll quickly go through the forms. Please bear in mind, we're looking at 9 and 9C. We'll touch upon some aspects of 9A as well, but we look at it from two perspectives: inside out, outside in. When we look at this from the first aspect, members will be very aware that whatever is taxable needs to be reported in table number 4 of GSTR 9, and I'm sure that's all been reported. What is taxed, I'm sure, is discharged also, so there may not be something amiss because nobody has filed an incorrect form. Whatever you wanted to say has been said in GSTR 9. Of course, GSTR 1 has been filed, 3B has been filed. Based on that, the corrections have been carried out according to the updated special instructions, and taxable turnover has been reported in table number 4. But I'm very interested to see table number 5, how many zeros are contained in table number 5. Reason being, there are a number of taxpayers who hold the view that what is taxable is the terms of reference of the tax authorities. Why should they be bothered about what is not taxable? Please bear in mind, gone are those days where we could give this sort of a response to the administrator to say that since it is beyond the scope of this law, there is no occasion for me to share those information and offer explanation about those transactions. Please bear in mind, in GST, everything is their business. If it is taxable, they want to know how. If it is non-taxable, they're even more interested to know how exactly it is non-taxable. I would look at a GSTR 9 where table number 5 contains only zeros or mostly zeros with great suspicion, for the reason that it is rarely any taxpayer who may have nothing that is non-taxable. As you know, table number 5 makes provision for reporting all sorts of transactions that don't suffer the incidence of GST, whether it is exempt from tax, whether it is non-taxable, whether it is non-GST, whether it is no supply, all transactions. Please bear in mind, in GST, we have understood this well, that outward supply need not be residing only in an income account. It can be in an income account, it could be in a liability account, it could very well be in an expenditure account also. For that matter, it could be on the credit side of an expenditure account. Friends, we need to be very careful when we are reporting transactions for GST, because it's not just what is taxable that is up for scrutiny, it is also those that are non-taxable, because the basis on which a taxpayer has interpreted the law so as to come to the conclusion that something is not taxable. Give you a quick example. A person, a GPA holder, makes profit on sale of land. Obviously, he carries this impression that he is selling immovable property, that too land, therefore it need not be offered to tax. But please bear in mind, we've seen established authorities in India following Suraj Lam, Supreme Court has said GPA holder does not transfer property in land when he registers the document. A GPA holder merely executes the sale deed as a power of attorney of the seller of the land or the title holder of the land. So therefore, any margin earned by the GPA holder is exposed to GST. Whatever may have been our misunderstanding about the law, or it could be a deliberate misinterpretation of the law, attempting a misadventure in GST, all need to stand scrutiny. Please bear in mind, I would be extremely concerned if table number 5 were nil, as in no data reported here. Please look at it from that point of view. When you go back and look at the GSTR 9 that has already been filed, please examine whether there are any questionable transactions here. Please bear in mind, I'm not even canvassing for a moment that everyone will receive a notice. But please bear in mind, everyone can receive a notice. Notices will come not only for mistakes committed, but notices will come to know what has been done. Please bear in mind, in a self-assessment tax regime, the only window for the tax administration to get a look into the books and records of the taxpayer is through section 61. So please bear in mind, notices can come and there's no need for taxpayers to get concerned, overly concerned if there are a number of notices that are received. The reason for concern will be only if we don't have answers to those notices. Let's look at table number 6 also very quickly. Whatever credits have been claimed in 3B will flow into 6A, and we need to offer details of whether it's comprised of inputs or capital goods or input services in 6B. Please bear in mind, as long as 3B remains, there is no entry scrutiny. There is no scrutiny of the credit at the entry gate. Whatever we report in 3B becomes the credit that I am holding out. Please bear in mind, we are making a positive assertion on facts that under a self-assessment tax regime, taxpayer is saying, I have examined the law, I have interpreted the law, I have applied the law to my facts and come to this conclusion that so and so credit I am eligible for. A taxpayer makes this assertion at the risk of interest and penalty, being mindful of the consequences of claiming credit that he is not eligible for. A taxpayer goes ahead and makes this positive assertion on facts and takes the credit. Now, if you look at 51/19, members are concerned saying that how do I give breakup of inputs, capital goods and input services? Government very clearly came out and said, all right, you are welcome. Wherever you are not able to provide details, government did not change the form, but government gave an option not to furnish the information. You don't have details about inputs, capital goods and input services. All right, squeeze all the details into inputs and report it. We will look at it later. Friends, any GSTR 9 where the option allowed by the government is taken, I feel looks like a treasure map. You can think of a treasure map where there's a red arrow pointing exactly to the location where the treasure is sitting. Please bear in mind, a GSTR 9 that does not contain breakup of inputs, capital goods or input services, I would be worried, because that is exactly the place where questions can be asked. Please bear in mind, Section 61 places 4 aspects for consideration. The notice will be issued in ASMT 10, reply in ASMT 11, and the conclusion of the proceedings in ASMT 12. But please bear in mind, a proper officer needs to look at a return, find a discrepancy, and ask for explanation. These are the 4 aspects of Section 61. When you find that the details that a taxpayer on one hand says he has, and therefore says, I have examined what extent I am eligible for credit and gone ahead and claimed credit, the same taxpayer now says he can't give the breakup of inputs, capital goods and input services and is squeezing all of that in 6B under inputs. Please bear in mind, expect notices when you find such situations in a GSTR 9 that is filed for 1718. Another aspect, look at quickly into table 6 and 7, you will find that reversals that ought to have already been made may now be made in table number 7. Please bear in mind, whether we are where we are liable to reverse credit, we need to examine 2 situations. There could be an output tax that has already been discharged using such ineligible credit, or the credit that is claimed still remains unutilized. When you look at both these situations, there are 2 different consequences that will arise, because utilizing ineligible credit, whether it is a case of ineligible credit or a non-payment of output tax which has been discharged using such input credit which was ineligible, comes up for consideration. Please bear in mind, we may be thoroughly convinced with our innocence with which we have gone about reporting these transactions. But the law very clearly lays down the ingredients for any action from the tax administration needs to have very few ingredients, and clearly non-reporting of information opens up the extended period of limitation also. Whether that is tenable or not is a different matter, but whether the tax administration will stay away from accessing those provisions or not, members can come to their own conclusions about it. So when you look at this GSTR 9 inside out, you will find that there are a number of remarkable aspects that are conspicuous by their absence in the way this form has been filled out. Many have clamored that table number 8 is acrimonious. It can't be provided. How can we provide details of what needs to appear in table number 8? Please bear in mind, information that a taxpayer has authored, taxpayer will be called upon to give answers. But if table 8A contains information that is system generated, where is the need for taxpayer to be anxious about giving information? Forget about table number 8A. All that needs to be provided needs to flow straight away into table number 8C to identify which part of the credit relating to 1718 has been claimed in 1718 has been claimed in 1819. So when you look at it from this point of view, there have been gaping holes as far as the data furnished. Members may note that entire table number 8 in an uncertified form was required to be attached along with 9C. I'm not sure how many have gone ahead and reported that and how many have stayed away from reporting. I have even seen forms where entire table number 8 except for table 8A contains only zeros. No data has been reported. A position has been taken by the taxpayer to say, I don't know what 8A is made up of, so therefore I don't know what further information I need to provide as regards 8D is concerned. Friends, please bear in mind, table number 8 can be prepared with or without the taxpayer's consent. Very clear, table number 8 can be prepared with or without taxpayer's consent. The form allowed the taxpayer to take this opportunity to offer explanation, but the taxpayer has been rigid as far as his position is concerned and chosen not to give any information in table number 8. So here is another treasure map marked X with a big red arrow pointing to table number 8. When you look at the way data is flowing here, please bear in mind we also need to consider liability that is discovered at the time of preparation of GSTR 9 needs to be discharged by paying in cash through Challan and DRC 3. Please bear in mind when we downloaded DRC 3, whether we have opted for financial year 1718 or 1819 or 1920 is still not decided by the software. So therefore, taxpayers may have chosen more than one options. A typical case could be unpaid RCM, whether it was discharged through 3B in 1920 or through DRC 3 of 1920 or DRC 3 of 1718 will have further questions to be answered. So when you look at it from this perspective, members will become sensitive to how is it that the department is going to look at these transactions. So please look at table number 8. What are the omissions and commissions, the misunderstanding, the misinterpretation, or the misadventure that we may have attempted in filling out this form? The other aspect to look at here very clearly is when you move into table number 10, 11, 12, 13, 14, please bear in mind a lot of discussion has taken place as to what data needs to flow into what is called part 5 of GSTR 9. Whether the data relates to 1718 or of 1718 or for 1718, some stand has been taken. Clearly, tax administration is not barred from questioning what stand has been taken. Whatever stand has been taken is apparent as far as part 5 is concerned. So please identify when the taxpayer himself makes an admission that there is a certain amount of liability relating to 1718 which has been discharged in 1819, thereby appearing in table number 10, 11, 12, 13, 14. The question of interest is unmistakable. I know a lot has been spoken about interest, whether it is on gross or net, whether the amendment is retrospective or prospective, and when will the amendment be notified, whether Madras High Court's decision in Reflex Industries will prevail in Karnataka or other states, and so on and so forth. But please bear in mind, the question about interest is staring at our faces. We need to know that when we have admitted something in Part 5, how can we then say there is no interest liability? The question is whether on gross or net. Again, here, please consider whether a show cause notice is required to recover interest or not. There are judgments here, Karnataka High Court, LC Infra, and Jharkhand in Mahadev Construction, judgments have been rendered in favor of taxpayer. But please bear in mind, just because there are judgments in favor of taxpayer, can we assume that tax administration will not even attempt to recover interest on gross? The law can be whatever. Please bear in mind, if eventually the tax administration never attempts to collect this tax, can we say that at any time department can come back and they won't be hit by limitation? Please look at it from that point of view. There could be questions certainly arising simply because there is some data reported in Part 5. Please bear in mind, we're still looking at it from inside out and seeing how it appears to a tax administrator. When you look at the remainder of this form, a lot of data is required as far as table 15 is concerned, table 16, 17, and 18. Options have been provided to furnish data relating to 15, 16, 17, and 18, and nearly everyone has chosen to take this option. I would be very apprehensive if someone says, I don't know what quantity of material has been sent for job work. I don't know what is the status of refund claims filed. I don't know what supplies have been sent under 31(7) consignment sales. I don't have any idea about my own outward HSN data. Please bear in mind, inward HSN data we don't have is one aspect. But to say that I don't have outward HSN data of my own supplies is quite surprising. This is another treasure map with a big X and a big red arrow. I want to leave this part for members to consider because we are going to go back to these tables, but from a different perspective, outside looking inward. As someone who's looking at GSTR 9 that has been furnished in whatever way it has been furnished, how is it that a tax administrator is going to look at it? The first aspect is, before looking at any GSTR 9, it is tremendously important to know whether the person understands your business, the business of this particular taxpayer. How well does someone understand the business? Because if you understand the business, you will know what questions to ask. When you find notices being sent by the tax department in ASMT 10, and the questions are not very, questions are very generic, then you can understand that domain-specific questions are not being raised. So when a this is a challenge for tax administrators to bring their understanding of this domain, this industry, this sector, this business, this product, this service, before asking questions. Now look at some of these aspects here. If you look at table number 4F in GSTR 9, you'll find that very clearly it talks about advances. Friends, is it better to pay service tax at 15% for the first 3 months of 17-18, or is it better to pay GST even though it is at 18% by deferring the billing for certain transactions? Someone who understands the business of the taxpayer will know very clearly what to look for, because what is there in the form is correct, because no one has filed GSTR 9 with errors. But what is not there, conspicuous by its absence, first 3 months, whether transactions have been subject to service tax or GST becomes a question. If you look at 142.11a and b, very clearly it says notwithstanding anything contained in 12 or 13. So therefore, if the levy of VAT was legitimate on a particular transaction, merely because any of the time of supply events take place under section 12 subsequent to July 2017 does not mean we could pay GST and get away with it. And similarly for 142.11b also, if service tax was rightly payable, we can't get away paying GST. We can't even say that, look, I'm paying 3% higher tax compared to service tax, because what if the service tax was non-creditable in my customer's hands, whereas GST paid is creditable in my customer's hands. So please examine. There could be a situation where the wrong tax may have been paid, and 4F will reveal what has taken place. 4F deals with advances which are still unsettled with an invoice up to 31/3/2018 have to be reported in 4F. I know the instances where goods are only are exempt from tax on advance, but services continue to be taxable. But let's see what is there in 4F. Becomes a matter of interest. Imagine a business. It could be a works contractor, it could be a developer, it could be a project management company, it could be a consultancy service provider, it could be an event management company, it could be any travel agent, any business. If you find 4F containing 0 there, you have reason to ask questions. Looking inward from the outside, here are the questions that come to someone's mind. Another aspect to look at is 4I and J. These are places which talks about debit notes and credit notes. Please bear in mind, if I find a business that is not free from debit notes and credit notes, like the same business I listed earlier, works contractors, event management company, travel agents, consultancy services, in such businesses or dealers of OEMs, in such businesses, debit notes and credit notes are not uncommon. Let's put it that way. When something is not uncommon, why is it not reported specifically as a debit note, credit note transaction in table number 4? Options allowed says you can net it off with the taxable turnover. Who has reason to brush something under the carpet is likely the one who is not in a good position in his own opinion. Someone who's not able to explain why he's got so many credit notes or debit notes is someone who would choose to report something by netting it off within 4B. So therefore, please consider something missing out of table 4I and 4J makes us wonder what happened to the debit notes and credit notes. Another aspect is, if you understand the business, you will know that there's got to be a debit note or a credit note. Another aspect to mention here is, of all the things someone may make a mistake with, invoicing is the one area they are likely to be most careful about. When there is a debit note, it makes me wonder, will any supplier venture to bill the client less than what he ought to have billed? What we bill itself, there is doubt whether the customer will pay, certainly pay within time, and so on. Why will I make a claim itself less than what I was entitled to? So existence of a debit note itself raises questions about the correctness of the invoice itself. Maybe I'm raising a debit note today to defer the time of supply and therefore the time of discharge of my tax on accrual basis. So existence of debit note raises multiple questions concerning the original invoice itself. Credit note. Why will someone bill more than what they should have billed? It's remarkable. No one will make mistakes of this kinds. When you find areas where something is amiss, you need to find that transparently reported. When these two tables are particularly not reported expressly, all right, if you look at those specific cases, you'll find that they're conspicuous by their absence. How can table regarding debit notes and credit notes contain 0? Just because they have given an option. Government has given an option, but look at the ones who took it. All right, that makes us wonder. Another aspect to look at is table number 5 contains nothing or almost nothing. 5D, exempt supply, nil rated supply, no supply, haven't been broken up. If exempt supply does not contain any data, it makes me wonder whether Rule 42, Rule 43 compliance have been done correctly. Please remember, we're looking at GSTR 9 from the outside in now. When exempt supply is not accurately reported, it makes me wonder whether Rule 42, Rule 43 compliance has been done correctly or not. Here are the clues that comes up to someone who is going to scrutinize the annual return. Annual return is going to be correctly filed, perfectly filed, it will tally. But the misadventure that someone may have attempted is not really hidden. One cannot expect to have gotten away with this because we need to recognize how we will need to respond to these transactions. Next, when you look at the situations that the further tables that arise is in a business where inherently there are a lot of pure agency transactions. We don't have to go very far to find out what these might be. It could be a case where there's a chartered accountant who has filed an annual return, and in his annual return, he has reported nothing under no supply. A chartered accountant, a tax consultant who has who has a fairly successful practice, he in his own return has reported 0 against no supply. It is possible, but less likely that a tax consultant, a chartered accountant, would never have paid GST, income tax, TDS, and other statutory charges on behalf of a client and got reimbursed for the same. Obviously, when those charges were invoiced to the client, they have been excluded from computation of taxable value, so that by relying on Rule 33. But when the instructions very clearly says that no supply transactions also need to report it in table number 5, it is alarming that someone has chosen to leave it out. Why would someone be anxious about reporting this information? Taxable professional receipts, let us say, is 100. Maybe pure agency receives are 500. That could be a reason why someone is apprehensive. Understanding the business is important. Looking in from the outside gives a lot of insight about what needs to be scrutinized when you find something like this missing in table number 5. Next, friends, important aspects, please look at it. I see a lot of questions coming in. I would encourage members to focus less on the questions, because what we are discussing today is my expectation of what might be the findings when the tax authorities will scrutinize the returns. So I would tend to think that questions should be very few rather than plenty, because we are not discussing supply, we are not discussing input tax credit, we are not discussing scrutiny, we are not discussing 9 and 9C for 18-19. We are looking at implications of annual return of what's filed in 17-18. So let's look at table number 6. I have a few questions to pose for members to consider. Let's say a taxpayer whose GST or 9 has been filed for 17-18, credits have also been taken in 3B in a proper manner, but that taxpayer in his income tax return has voluntarily disallowed 1 crore worth of expenditure on which GST may have been paid. Please think about it, whether expenditure disallowed by a taxpayer in his computation statement will require some input credit treatment in table number 6. I am not saying that if you disallow an expenditure in income tax, it is ipso facto barred from input tax credit. Although I am tempted to say it, I am not saying it. I will leave this as a question for members to consider. On one hand, I am admitting in my computation statement to an income tax authority that this expenditure is not admissible under 37(1). But in GST, the very same taxpayer is holding out to the tax administration that input credit is admissible because it is used in the course or furtherance of business. There seems to be some contradiction here that members may want to consider. Please bear in mind, whatever credit I have taken does not mean I am beyond scrutiny. Whatever credit I have taken is provisionally allowed at the risk of interest and penalty. I have taken it. Another instance we can look at is sunk costs. Expenditure. You understand what is sunk cost in new entities that are set up. Sunk costs are basically revenue expenditure during capitalization period, which are neither to be capitalized nor admissible for carry forward of loss in income tax. There's a lot of jurisprudence. I can recollect, go back to 1952, Western India Vegetables onwards. A lot of judgments, Tuticorin Alkali, Bongaigaon Railway, all those judgments dealing with this issue. My question is, when you have admitted in your books of accounts and income tax returns that this is a sunk cost, don't we at least need to give some consideration whether there is any doubt about their admissibility of input tax credit? I would think that table number 6 itself raises number of questions. To someone who understands the business, looking inward from the outside will have these questions. Internet economy enterprises have far more aspects to be concerned about, because in the lifespan of some of these new age businesses, there is a phase in the enterprise where they haven't yet monetized, as in come up with a business that is ready to generate income. Input tax credit, friends, is not, I'm sharing this with members knowing that it's going to be not very comfortable territory, but I want members to consider, if a if input tax credit is to be allowed immediately upon incorporation of the company, the language in section 16.1 would have been a lot different than what we find it today. 16.1 pays special attention to business. Commencement of business and incorporation of entity are not one and the same. There could be an interval of time. It could be 3 months to 3 years to 10 years between incorporation of company and commencement of business. There is a lot of jurisprudence in income tax as to what is setting up of a business. Please consider someone who understands these aspects looking into GSTR 9, keeping in mind that this is a new age business that has been recently established, having access to all the information that is out in public domain in social media about this business. Is it not possible for someone scrutinizing GSTR 9 of such an entity to ask himself that question before asking the taxpayer whether there is really any business that is commenced to claim all these credits? Please bear in mind, table number 6 itself is going to uncover copious amounts of dispute relating to input tax credit that we need to be very cautious about. Of course, the disallowances under table number 7, someone will look at and understand. And if you look at the data that the tax department has, they have more information than taxpayer. Very clearly, taxpayer is struggled to file 17-18 annual return in 1920. After making innumerable representations for extension of time, finally managed to get the return through the door on 7th of February. But the tax department has a lot of information. The question that may come to someone's mind is, will the tax department be so knowledgeable about every business? I would think yes, because tax department is free to create specialist groups of officers focusing on one or more industries depending on the extent of issues. And I would believe that they have developed what is called an errors master, sector specific errors master. If a chartered accountant can have an errors master industry wise in his office in order to provide advice and consultancy to clients in those sectors, why is it strange that the tax department will not have an errors master? To boot, I would think that the system, we may have our own grievances about the working modules in this system, but I think we have made too much of this issue. We have tried to pin every misgiving in GST, as recently as in last week in Delhi High Court, everything we are pinning to GST portal. I would tend to think that there is a separate aspect of this portal that taxpayer may not be able to see, running the analytics, which is pushing data to tax officers to identify these issues and then take it up for scrutiny. So please bear in mind, anyone who believes that there are so many taxpayers in my industry, maybe I will slip through the cracks. It is so remarkable that I was speaking to one very large company about a tax position. They said, what are all the other companies doing, was the question of this person. When you ask the new entrants in that industry, they say, I can't comply with this rigid tax system. If the government comes after this sector, don't you think they will go after the big guns in the industry first? The big guns are asking what the vast majority of smaller players are doing on a particular tax issue, and the new entrants in this industry are looking at what tax positions have been taken by the leaders in that industry. So please bear in mind, department does not have any favorites here. Very clearly, once the data points are available to raise questions about such issues, the system will push documents. You're aware, right, that GSTR 3A, which is a notice before doing assessment under 62 in case of non-filers, is going to be pushed by the system and it's not going to wait for any officer. So anyone who thinks that you will slip through the cracks, please rest assured that the system will not allow that, because it is uh, addressing all those areas where slippages. Government will not be very intrusive, I would feel, because of the number of taxpayers, but the system need not be very hands off. The system can push data, you need to queries, and taxpayer will need to respond. So please look at it from that point of view. I would encourage taxpayers to not to ignore any communication coming from the tax department. It does not have a DIN number, you can throw it away. I would be very cautious. I would be very cautious, because it is not without reason that the system has picked up a particular taxpayer's return and pushed a certain query through the system, not for the taxpayer to ignore it, but for the taxpayer to be prepared with a suitable response. So please recognize, how is it that we are furnishing this data? How do we need to respond to such communication flowing from the system? When you look at scrutiny of GSTR 9 outside in, if you understand the business well, you will know exactly what is going on here. Take the example of a tour operator, take the example of a travel agent, take the example of a event management company, builder, developer, infrastructure contractor, government contractor. There are enough number of areas where the taxpayer has entertained a bona fide belief, entertained some wishful thinking that some positions that were acceptable in the earlier tax regime will continue to be acceptable in GST also. Please bear in mind, someone who understands your business is preparing list of potential issues to be raised in a scrutiny, and that is going to be driven by the system, of course, through a proper officer under the proper section. So you cannot find fault on the legalities of that proceeding being initiated. So look at it from that point of view, someone who understands your business well. So therefore, I would encourage members, because 1819 also returns are due, it's around the corner, please take time off to revisit some of those tax positions to assess whether you are still confident that those positions are correct, whether you're still confident that those positions are correct to continue in the subsequent years also, or you would like to either take help from any number of experts who are available, or yourself engage in a deep study of that subject to identify what might be amiss here. Friends, when you look at the way GSTR 9 is filled, it is remarkable. It is remarkable that it is got so many zeros in it and so much of information that is not included, that you will wonder if someone really understood the business prepared this return, or someone who simply knows how to use the tool and the accounts has prepared this return. Now we'll also switch quickly to look at GSTR 9C. I don't want to dwell too much into this aspect, because we're looking at it from both perspectives, inside out, outside in. We'll come back to some of those aspects in GSTR 9, because we are looking at GSTR 9C. When you look at GSTR 9C, inside out, what are the things that you will find? I would be shocked to find zeros in GSTR 9C. Why? Because a chartered accountant who certifies GSTR 9C is certifying the zeros also. When a chartered accountant says something is zero, he does not say, I am not saying anything about this particular table. For example, table number 5D. My favorite in table number 5 is 5D, E, F, and J, and most of all J. If you look at this particular table, if you say 5D is zero, what it tells the outside world, particularly the tax administrator, is the chartered accountant who has certified, completed the reconciliation and issued his certificate in Part B, he has studied the business of this taxpayer, understands the fact about whether there is one distinct person or more than one distinct persons, and come to this considered opinion that there is no deemed supply inter se. Whether you agree with Columbia Asia or you disagree with Columbia Asia, you have taken a tax position regarding Columbia Asia. Who has taken a tax position? The taxpayer has taken a tax position that there is nothing affecting his business, although he has multiple registration, although there are back offices in the head office supporting other branches and so on. Taxpayer has taken a position that there is no deemed supply. 5D says it is 0. I know press note issued by the government on 3rd of July very clearly says that the role of the chartered accountant is only to do the reconciliation. I would think that just because it tallies does not make it correct. Please bear in mind, when the tax administration has sought the help of the auditor to make his expertise available in explaining the reason why the turnover in GST are 9 and the turnover in the books are not matching, he needs to conduct himself befitting of his expertise. If 5D is 0, I would think that that says a lot. Conspicuous by its absence, it says a lot that here is this legal entity with half a dozen registrations across the country is taken a tax position that there is no cross charge that is applicable. I'm not even saying that the responsibility and accountability will be pinned on the auditor who certified it, but I would think that an auditor who certified 9C with 0 against table number 5D is furnishing information to the tax administration to go after the taxpayer. To ask the taxpayer, why does your auditor's reconciliation say 0 against 5D? Go on further to 5E, 5F and 5J. Friends, you will find discounts given not permissible according to GST law. Please bear in mind, discounts given not permissible according to GST law. Credit note issued not permissible according to GST law. Credit note issued but included reduced from taxable turnover needed to be added back in 5J. When you look at all of this, I would think that, would you not think that the tax administrator who knows GST law reasonably well, who understands your business equally well, not be able to see what's going on here? Please bear in mind, when a chartered accountant has certified that 5D, E, F and J is 0, that is enough incriminating evidence for the tax administration to launch an investigation to find out why those transactions don't exist, coupled with the fact that he understands the business. I'll give you an example here. The 9C here, let us say, relates to a dealer of cement or automobiles or electronic goods. Pick a dealer of an OEM. There is no distributor in between. There's a dealer attached to an OEM who receives goods and further sells. Prices are all predetermined, standard list price, etc. Here is this dealer who reports that there is no credit notes issued that are not admissible under section 34, no discounts that are not admissible according to section 15.3. When you look at these books of the OEM or of the books of the dealer, you will find that there's got to be something that is not conforming to section 15.3b or section 34. You know why? Because section 34 said for every invoice there should be one credit note until it got amended by the Finance Act of 19, which means in 1718, if 1,000 sales invoices were given, they should have given 1,000 credit notes, and it's impossible to have given 1,000 credit notes. So therefore that credit note is not conforming to section 34. Therefore that credit note cannot be in alignment with 15.3b also. Friends, all it takes is for someone to understand your business, to look into GSTR 9C and find all the holes in it. And in the course of scrutiny of a return, whether they can do it or not is a wonderful question. The question is whether 9C can be scrutinized under 61. No, 9C is not a return, 9 is a return. Once 9 has been filed, the 1 and 3B relating to the 9 cannot be questioned because it may have been resolved and no errors may remain. Therefore, 9 can be scrutinized under 61, but 9C can be scrutinized under 65. Why not? It can be selected for audit. Question that arises is the wing in the department that can do scrutiny, the proper officer under 61 is not the proper officer under 65. Please, let us not get into the shoes of the department's administration unless we are raising questions on legality, unless you are planning to go to High Court, unless you are planning to raise objections about legality of service of a notice. Let us not presuppose that the department does not understand its own powers. Of course, they understand their powers. If you see circular number 1053/2/17 issued on 10th March 2017 in the context of central excise, there is brilliant administrative discipline laid down by years of judgments of courts. An excellent administrative discipline has been laid down. Do you think an officer of the tax administration will be blind to the discipline that applies to him or her and therefore invoke the wrong provisions? I would think not. If ever there were to be such a fatal error, you should be the first one to object to it. But please don't mislead yourself thinking that they will make such fatal errors. When we focus on technicalities of the notice, that itself is an indicator that you have no case on merits in your own mind. So let's look at what happened in 1718. When such gaping holes are identifiable from table number 5 itself, it shows that there is something amiss in the tax positions taken by the taxpayer. We are still in table number 5 of 9C. We haven't moved on. We'll look at a few more issues. Let's look at this aspect. When you look at the option that was allowed when the clamor for simplification of 99C was going on, government said, when you don't know where to fill table number 5, please fill everything in 5O. When you don't know where to fill all the reconciliation differences, please fill everything in table number 5O. It's a joke that is very private to chartered accountants. When your trial balance did not tally, you know where you would stick the difference. That's all. Now, those who have taken this route, this option of sticking the entire reconciliation difference in 5O, there is a treasure map with a big X and a big red arrow pointing to all those tables in 5, that this is information that the taxpayer has not provided. Very simply, taxpayer can be now called upon. All right, your table number 5O contains a very big number. Can you provide me breakup of 5O? Can you provide me breakup of 5O? Just because we managed to file annual return 9 and 9C within time does not mean that's the end of it. That is the beginning of everything. Please bear in mind, all timelines in GST start from the date when annual return and reconciliation statement got filed. It's not the end, it's the beginning. So therefore, please bear in mind, anyone who has opted for this one fits all reconciliation exercise are in for further questioning. Not because you did something wrong. It was a legitimate option department gave, and the question that follows is equally legitimate. Please give me the details that you did not give when you filed your 9C. When you look at it from that point of view, you will find that further questions will come up. Another aspect to consider is when very clearly the law says credit notes that need to be reported, not complying with 34. In your business, if you are a manufacturer with a large distribution network, I know you are giving credit notes. Let's examine what is done with the credit note. The OEM who is so interested in meeting monthly sales targets has issued credit notes but treated it as a revenue expenditure. But the dealer who has received this credit note has reduced purchases by the amount of credit notes he has received. Please bear in mind, when I purchase something for 1 lakh rupees, I am liable under the law to pay 1 lakh rupees. How can I pay 90,000 rupees and settle my entire liability? There is one provision I'd like to invite members to go back and look at. Section 63 of Indian Contract Act very clearly says it is possible, instead of collecting 1 lakh 1 year later, the supplier can opt to collect 90,000 today. That can be the only where he settles the liability for a lesser amount is provided for in section 63. But please examine, as a dealer, did I have a right to demand settlement at 90,000, or it was the generosity of the manufacturer that he said, all right, you pay me only 90,000 rupees. Please bear in mind, whatever position the dealer takes, the dealer will have to answer, but the OEM has also taken some tax positions. The dealer may not be privy to 9C of the OEM, but the tax department is no stranger. The tax department can access both the 9Cs and see what treatment has been given by both the parties in respect of the same transaction taking place between them. Please bear in mind, friends, when we look at this transaction, let's not call everything a discount. I know we've been arguing about this, and I know this debate has been going on for nearly 3 years now, but I would urge members, do you think that the tax department is barred from objecting to such bona fide innocent tax positions taken by the taxpayer? Certainly not. Certainly not. Howsoever convinced I may be about the correctness of my tax position, at the very least I can expect a notice calling for information so that the issue is out in the open and it has to be put to trial. Please bear in mind, when I don't disclose credit note, debit note transactions, that itself sort of indicates my own lack of confidence in the tax position I have taken. Or one could say, I am very confident, but I am not sure department may agree with it. That is all the more reason for department to not agree with it and come forward to raise objections. So look at it from that point of view, how table number 5 will flow. When you look further into 9C, reconciliation, several aspects of this form needs to be reconciled. Taxable turnover needs to be reconciled in table number 7. When I look at table number 5, when I compare with table number 7, looking at it from the inside out, very clearly we can identify what has been missed out in table number 5 of GSTR 9. Please bear in mind, both these forms play a certain role, that they are coordinated with each other. How we report the reconciliation table number 7 has its own story to tell. Now we're still looking at it from the inside out as far as GSTR 9C is concerned. We'll come back and look at it at 9C from the outside in also. When you look at table number 9, all right, table number 9 of GSTR 9C, all right, very interesting aspect that comes out here is whatever is your taxable turnover, you just need to break it up into all the rates at which you have applied the tax. What is the rate? How we have applied the tax based on the turnover, and align it with the taxes paid so that there's nothing unreconciled at the end of table number 9, 10, 11. So when you look at it from this point of view, you will come to know what tax positions a taxpayer has taken. I'll come back to table number 9 again when we look at this same form outside in, because auditor will certify this is how the taxpayer has charged taxes on his invoice. That breakup is available in table number 9, because taxpayer may be in doubt about the rate of tax that is applicable on his transaction. As you know, in the number of instances, what tax is payable to the department need not be the same rate I should collect from my customer, isn't it? I can collect 5, but I can pay 12. I can collect 12 and pay 18. I cannot collect 28 and pay 5. That leads to other consequences. I can collect lesser than what I am liable to pay. If you look at table number 9, it discloses a very clear blueprint of what is the rate-wise breakup of the turnover of this registered person. Then you look at table number 12. Table number 12, very important, reconciliation, because you know, credit in the books and credit in the returns need not match, especially when we have filled up part 5 of GSTR 9. There's got to be difference. There is a connection. I'll only quickly mention what are table numbers. 8C, 13 will link with table number 12 of 9C. 8C and 13 of 9 will have a story to tell as regards what we do in table number 12. When you look at table number 12, please bear in mind the credit as per books, credit as per return needs to reconcile. I know there are tax positions being taken saying that I will expense the input tax credit, because the law restricts that input credit in respect of capital goods should not be capitalized with the capital goods, but it is silent as regards input and input services. I will not only claim that input tax credit on inputs and input service as a credit in my 3B, but I will also treat it as an expenditure along at the time of inventorizing it. Some may think that this is too far-fetched an argument. I'll just invite your attention to a very recent Supreme Court judgment of Maruti Suzuki, where from the facts of the case, it is clearly seen that Maruti claimed input tax credit on various, this under the SENVAT rules, on various inward supplies. There was an unused closing balance of 69 crores. What Maruti did was that 69 crores of closing balance they claimed as a deductible from their profits to arrive at GTI. This was carried in appeal to Supreme Court, where Supreme Court has rendered its judgment. What Supreme Court said is not as relevant as for this discussion to highlight that people have ventured into various aggressive tax positions thinking that nobody will know. Please bear in mind, somebody will know. And table number 12 is exactly the place where this will be revealed. But if you look at the options, table number 12B and 12C, someone can opt not to furnish information. All right, option is given. But those who have taken that option obviously because they have reason not to disclose that information. Please bear in mind, if there is credit, let us say there is goods in transit, members will quickly be able to understand this example. If there's goods in transit which I need to, which is appearing in 2A of March, but the credit is admissible only after I receive the goods later in April or May, very clearly I could not have taken credit in the month of March. But from an accounting point of view, how does it appear? In 2A, how does it appear? Obviously, this credit will appear in 2A of March, although in my books I have claimed the credit subsequently. It is exactly this that needs to be reconciled in table number 12, but members have considered that table number 2 is complex for us to report. Please bear in mind, you cannot take double benefit. There is no debate around that. We cannot say that only admissible credit, once credit is finally decided that it is admissible, I will report that as another income in my P&L account at that time. All this adventuristic accounting treatment, I would say, leave it to some experts. Everyone cannot launch into this and take advantage of this. Please, if you have done so, it is done with advice. So therefore, department is not barred from raising questions. When you look at a 9C and you find table number 12B and 12C containing 0, and I understand that this business is naturally someone who has goods in transit, I can raise these questions. If you look at table number 8 in GSTR 9, compare with table number 12, it is a telltale sign that there is something amiss. Please bear in mind, the one who is scrutinizing a return is not someone who does not understand your business. The proper officer may or may not understand your business, but he is supplied with sufficient intelligence by the system and subject matter experts in the department to put the right questions. I would be amazed if anyone were to establish that subject matter experts don't exist in the department. I would believe that department has invested time in training experts in each of the industries depending on their own risk assessment criteria. And with the system, they're able to sit anywhere in the country and furnish this errors master, as I've called it, to all departments across the country, state and center, to bring up these questions. Please bear in mind, this is self-assessment tax, and we cannot think that the tax administration is barred from looking into the books. Of course, they will only interfere in exceptions. But if the exceptions are plenty, we cannot expect the department to turn a blind eye. No, but then what is going to happen to the promises made by various authorities that there will be reduction of litigation, etc.? Please bear in mind, reduction of litigation is a two-way street. Compliance will ensure reduction of litigation. A taxpayer cannot launch into various adventuristic tax positions and then pretend that he will hide behind the reduction in litigation promise made by various authorities. Please bear in mind, if we have taken tax positions that are risky, it is bound to be questioned, and that gives us an indication to let's look back at 9C outside looking inward. Let's look at GSTR 9C from the outside looking inward. Please bear in mind there will be three kinds of GSTR 9C. One, prepared by those who understand the business and the law very well. On the other end lies those who have prepared 9C mechanically without giving much thought, thinking that nobody will look at the return, and then all those who lie in between. When you look at it from that point of view, by looking at a return itself, you can tell that something is wrong. When I was doing articles, I want to share this with you. My first year or second year of articles, there was accounts that had to be finalized. I prepared the final accounts to the best of my ability from the manual books. As you know, back then computerized books were not common. Manual books. That's thanks to that I learned accounts well. I prepared the accounts and I spent a lot of time making sure that there are no mistakes here, and I brought it to the partner for his review. He spent some 10 minutes looking at various parts of it. He asked for trial balance, he asked for some clarifications. As far as the entire accounts, he spotted only two areas. Those were the only two areas where I had made mistakes. Over the years, I have learned that a trained eye knows what looks wrong. He was able to spot. He asked only two questions, and those two were the only areas where I had made a mistake. And I was so heartbroken that all the other 100 areas where he did not ask questions, I had worked so hard, I thought he did not appreciate it. Over a period of time, I realized that there is no need to ask questions about things that are done correctly. It is only those areas where there is something amiss that questions need to be raised. I would be surprised if such insightful questions are not raised based on GST or 9C, looking at the 9C from the outside, looking at it inward. Going back to table number 5, when you see how the reconciliation is prepared, please bear in mind very clearly turnover for April to June, how it has been explained, needs to be analyzed. Whatever we may say regarding the subsuming of earlier laws into GST, please bear in mind central tax authorities have their areas of expertise in the earlier laws. State tax authorities have their own expertise with earlier laws. We may say whatever we may want to say about their expertise in GST, but we cannot question their expertise as far as the earlier laws are concerned. And when they raise questions about the way we have done the reconciliation, splitting the 9-month and 3-month turnover, obviously they will compare with the annual returns in the state VAT or the periodical returns filed under the early laws for those 3 months. Like I gave you this example about whether VAT or whether service tax or GST should be paid on the first 3 months turnover. Those very questions will come up now. Please bear in mind, to claim benefit of 142.11C, the VAT and service tax payment details ought to be reported in Tran 1. Tran 1 has had its own disputes in the courts, but as far as 142.11C is concerned, unless I have admitted in Tran 1 that I have already discharged VAT and service tax, that turnover will not again be taxable in GST. But what if I have not admitted in Tran 1, having already paid VAT and service tax, what is the position I have taken in GST? Maybe I have paid both tax. Maybe I have paid both tax. VAT and service tax was rightly payable, but I paid VAT and service tax, but I also paid GST. Under section 76, any tax wrongly, GST wrongly collected cannot be returned to the customer. It has to be paid back to the department. Someone might say, no, I have returned the tax back to the customer. Can that fact go without verification? So first 3 months turnover will have its own questions, how that reconciliation has been carried out, how the returns for the earlier period has been filed vis-a-vis the turnover reported as first 3 months turnover in 17-18. So when you look at these overlapping transactions, how this has to be reported will have its own challenges. Another aspect to mention regarding overlapping transactions is, what is an overlapping transaction? What is an overlapping transaction? Suppose there is an AMC signed in January 17 for 1 year. Is it an overlapping transaction? that some part of it is liable to GST. Please bear in mind, there is industry specific fact pattern relating to what is overlapping transaction, what is not overlapping transaction. I'll come back to this aspect when we look at part B of GSTR 9C to identify what auditor has done to explain himself as far as overlapping transactions are concerned. Another aspect to look at, friends, is when you see the debit notes, credit notes reconciliation, it has its own story to tell. I don't want to repeat. I believe members have picked up the point as far as what happens if all the reconciliation is fit within 5.0, as if that explains everything. Next aspect, look at a lot of interest I like to see is transactions that are not a supply in monetary consideration. Transactions that are a supply but whose consideration is in non-monetary form, how it has been reported. Please bear in mind, GAAP basis of accounting has an inherent limitation in the concept, in the money measurement concept. Money measurement concept means any transaction with a financial measurement in money terms alone can be accounted. So barter and exchange transaction, even if I want to, the rules of accounting prevent me from passing an accounting entry. I'll repeat myself here. Barter and exchange transactions, even if I want to, the rules of accounting prevent me from passing an accounting entry. In a business, there are certain barter transactions or exchange transactions that are inherent. It is inherent, and it will be a reconciliation item. Just because the reconciliation tallies doesn't mean everything is all right. How have we treated a taxable supply in GST that does not find a accounting entry because it falls short of this money measurement concept? So here there is a transaction where I have to pay output tax, but in the books there is no accounting entry. How have I reported those transactions? Come on, who will know all these transactions? I only don't know these transactions. I would think that that would not be a fair statement, because I believe chartered accountants well versed with the business know these transactions. A tax position may have been taken. I'm not going into gifts and samples and discussing and debating input credit now, but I'm only trying to bring out this issue that in certain businesses, there is barter and exchange. That is undisputable, because you cannot say there is no barter or an exchange in my business when you are giving away gold coins, when you are when you're entering into joint development arrangement, so on and so forth. Now, inherent in the business, barter and exchange transactions exist. It may not exist in one business, but it may definitely, if it is missing in certain businesses, it is a surprise. So if I know your business well, and I believe that in your business there are barter and exchange transactions, I don't need to ask questions. How have you paid discharge tax on the barter or exchange? All that I need to find out is whether the inward supply has been taxed on those transactions or not. I'll give an example. 2-3 examples. Manufacturer of furniture. This is one example that I've repeated myself several times, but I want to stay with that example. A manufacturer of furniture, in his list of inward supplies, plywood, hardware items, adhesive, transport charges, consultancy charges, rent, these are all the typical inward supplies appearing in this registered person's records. Suddenly, we find that there is chapter 71 items appearing as an inward supply. Chapter 71 is gold. A furniture manufacturer, why does he require to purchase gold items? And he finds that the supplier of this gold item is State Bank of India. This person has given his GST number to State Bank of India at the time of purchase of gold coins, and SBI has issued a tax invoice citing the GST number, and it is appearing here. every inward supply will become an outward supply today or tomorrow. Directly or indirectly, every inward supply will become an outward supply unless it is an inward supply that is consumed by the taxpayer. Tax consultancy services. See, a furniture manufacturer will take tax consultancy services not to sell furniture, but for his own consumption. He may consume inward supply of rent of his factory premises, warehousing activity. So there are many activities for his consumption. If you can identify which is for his consumption, all other inward supply must become an outward supply today or tomorrow, directly or indirectly. What is this gold coin that is an inward supply doing in this furniture manufacturer's books? Now you may say that it is a gift, therefore I have reversed the credit. I may say that it is not a gift, it is an outward supply for loyalty shown to you by the dealer or the consumer customer, and you have rewarded that loyalty with a consideration in gold coin. Let us say I am wrong. Let us say I am wrong and you are right, that reversal of credit is the correct treatment. Payment of output tax by claiming input credit is the wrong treatment. Can you rule out the possibility that the tax authority cannot canvass this argument? If he finds chapter 71 items in a furniture manufacturer's inward supply, can he not canvass this argument that there may have been an outward supply? I find a lot of support in the law for this argument of the tax authority, but please bear in mind that taxpayer has taken two positions. One, he has taken a position that it is not an outward supply. Secondly, he has also endangered his credit and reversed it also. With the passage of 16.4 time limit, he cannot now go back and take this credit. So therefore, friends, there are stories that can be told out of the tax positions itself. And when we are looking at scrutiny of the return, looking at it outward in, this story can be very interesting. It can be a thriller or a drama here, isn't it? So look at it from that point of view. Looking at it from this point of view, I'll give another example. There is I'm sure this happens in a number of instances, a builder, in respect of some of his delayed projects, he has rewarded his last few customers. Wherever there is a delay, he has given them white goods. All right. Not everybody who buys an apartment will get a fridge or a TV. Some customers, last phase, before handing over, some delay. To those customers, he has given white goods. Again, taking the same position as the before, this builder has said that I will not claim input credit. I will reverse this credit because it is a gift. I would think that this is a mixed supply because for one consideration, no consideration is separately received in respect of these white goods is admitted by the taxpayer. When there is a single consideration for the apartment and white goods are artificially bundled and delivered for a single price, I would think that it is a mixed supply and the apartment should be taxed at 28% and not just 12 or 5%, whatever, 12% in 17-18. So friends, please be very careful. The tax positions taken can be questioned. Why? Industry-wise, errors master being developed are pushed across the length and breadth of the country through the system so that your proper officer gets ready-made talking points. He just needs to pick the right section and send it across to you. Question is, are we mindful of this interpretation? If we realize it, 18-19 we will set right. If we are adamant about it, we need a notice and it will get set right. I would encourage members to look at the significance of 99C. Look at all the intelligence that we ourselves are revealing. In the past, for a tax administrator to understand the books of accounts itself was a big challenge. Matter would reach the limit by when assessments need to be passed. Till then, it would go back and forth. Here, all the information are filed, and only after that limitation on itself starts. So please bear in mind, there's a lot of information already available in 99C. When you look at this issue, we quickly go to table number 9, my favorite table in 9C. Looking at it from the outside inward, we look at table number 9. What happens here? What the taxpayer has done, auditor has verified, certified, and told that this is the breakup of the rate-wise breakup of the turnover. My question is, a tax officer who understands your business, can he not challenge the classification? Classification at 3 levels. Please bear in mind, I want members to take this point with a lot of caution, because it's very significant. I want to share with you. Classification can be challenged at 3 levels. Level 1, whether it is goods or service. Whether it is goods or service. For this, we'll give an example. Standing timber is not an immovable property under Registration Act and under General Clauses Act. Standing timber, growing crops, grass is not immovable property as per Registration Act and General Clauses Act, because immovable property definition in Transfer Property Act is in an inclusive manner. Next, goods. In GST law, goods is defined to include grass, growing crops, and things attached to and forming part of the land, of the earth. Now, grass and growing crop, is it goods or services? Very quickly, to summarize this example, 2 judgments, Marshall versus Green and Mahabir Prasad versus Inayat Ilahi, where basically what the conclusion can be drawn from these old judgments is that where the agricultural income arises out of letting out for one harvest season, it is goods. For multiple harvest seasons, it is services. All right, I won't go into details about this example. If it is not very clear, I will leave it for you to chew on the facts and you will come to the conclusion on your own. The same article, the same parties, the similar source of the optically exactly same source of income, for 1 year it will be treated as supply of goods, for another year it will be treated as supply of services. So first level of classification challenge is goods or service. Another example that I have shared often is someone who sells goods like scrap, which was not self-generated. It is not a sale of goods, but a supply of service. It should not be taxed at 5%, but at 18%. All right. First level challenge is goods or service. Second level challenge is your HSN challenge. To challenge your HSN, you have said 5%, maybe it is 12%, maybe it is 18%, maybe you don't know that what you are selling is not grains, because grains are exempt if it is seed quality. Grains are exempt if it is seed quality. What is seed quality? Is paddy grain seed quality or not seed quality? Is rice seed quality or not seed quality? Those who are involved in that trade and advising clients will be familiar with these scientific and technical information also. So in your own businesses, you will need to analyze what is going on. Once you identify transactions lists, another example could be you are selling a software under 4907 or 8523. See, second level of classification, HSN challenge, second level. 4907 is only license, 8523 is license plus media. Take an example, I am importing software. In non-physical form. Non-physical form, I don't pay customs duty, so I don't pay IGST under Customs Act. I will pay RCM under IGST law. But if I'm exporting software in non-physical form, is it goods or service? Please bear in mind, lot of challenge. All right. So first level challenge, goods or service. Second level challenge, HSN challenge. You may have made a mistake about the HSN to be applicable. Somebody may question the HSN that is to be applied. Third level challenge is intra-head challenge. It is goods. Within goods, there are more than one rates. I'll give an example. 9985. 9985 is support services and used by travel agents, where the use is classification 9985, serial number 23, Roman 1, 2, and 3 in 11/17. When you look at this, should a travel agent charge 18% on his commission, or should he charge 5% on the taxable value? Arguments are strong on both sides. I am not even, this is not even a session on classification, so I'm not even going into those examples. Arguments are on both sides. But one of the sides has been selected and the taxpayer has followed the tax position, and his auditor has reported in table number 9 that 5% entire turnover is taxed for this travel agent. Is it not possible for the department to canvass the other argument? No, 5% you are not eligible for. I'll give you in this travel example, I'll give you two examples. One is an advance ruling from Calcutta in golden vacations, and another advance ruling from Delhi authority in TUI India. Contradictory answers. Contradictory answers. I know members listening in, some of them in some of the interactions have very vociferously objected to the inconsistency in the answers by AAR. Friends, the very AAR which you are not happy with, the very AAR that is advancing a contradictory argument, why is that similar interpretation not possible for your proper officer to canvass against you? Please bear in mind, table number 9 will invite challenge at 3 levels. Goods or service challenge, HSN challenge, and within the category, rate challenge. Please bear in mind, obviously the taxpayer has subscribed to the least incidence classification. We can assume nobody has picked 28%. Taxpayer has picked the least incidence classification and disclosed that in table number 9. If more than one classifications are possible, why is it impossible for tax authorities to question it? It's not like they will question everything. All right, they also have other things to do. It's not like they will question everything. But if they are not satisfied, or if there are compelling reasons to verify the tenability of a contrary argument, why can they not question? Please bear in mind, if one proper officer in Bangalore raises a question, this data is not secret. It is available within the system for all officers to be aware that such a rate dispute exists with respect to a particular HSN. And if there are assessees in Raipur within their jurisdiction, will that officer not be prepped up to think whether such an issue can exist in his clients, in assessees cases also? Please bear in mind, speed of flow of information, we will see a whole new level in GST within the department. In the past, files may not have traveled so quickly, but in GST, it is possible to travel. And I'm not even for a moment supporting that such interpretation should be canvassed by revenue. I'm only, out of concern for members, calling out possibilities that can be raised when returns are taken up for scrutiny. At the first level, we find that there is no scope for any return to slip through the cracks. At the second level, system is going to generate alerts for queries to be raised. Third level, error masters will be developed to identify sector specific issues and push this through the due process, whether it is 61, 65 or 67, the due process. Understood what needs to be done as far as the returns are concerned, very clearly he will find a lot of information by just looking at the returns. Now we will look at part B. I got an alert that there could be some disruption in the internet connection. Now that message has gone. I think the connection looks strong. I'll keep going. Please do message me if there is some interruption. Now we look at part B, very, very important. Please bear in mind, while the press release issued by the government says the auditor is required to only do the reconciliation. We have discussed whatever the auditor does, the issue is not to pin responsibility and hold the auditor accountable. Ultimately, the tax administration is interested in assessing the taxpayer correctly. Therefore, information can flow from 9 or 9C. Tax administration is agnostic to the source of the information. Now we will look at part B. Standard template, filled up, filed, submitted. Now, auditor has had the opportunity to disclose, make his observations known. Any 9C that has been filed free of any disclosures, disclaimers, qualifications itself is reason to pick it up for review. I'll tell you why. A multi GSTN, GSTIN assessee, a legal entity having more than one GSTIN will falter in section 35 itself, because 35 says accounts and records to be maintained by every registered person. As you know, registered person does not maintain accounts. In fact, registered person does not know how to maintain accounts. The legal entity only maintains the accounts. Legal entity maintains entity level books and not distinct person level books. So therefore, registered person does not maintain books. Legal entity extracts information pertaining to registered person, and he is provided that to the auditor for his GST reconciliation statement and audit. So therefore, straight away there is a limitation and therefore reservation to be expressed in respect of the source data for preparing this reconciliation. So therefore, I would believe, based on the guidance and advisory inputs from ICAI, all our members have suitably made disclosure on all matters that require stakeholders to be put at notice regarding. So books of accounts is the first area where there is something to be disclosed. Further, auditor is not reporting whatever taxpayer has done. Auditor in his review has been furnished some information, for example, classification, valuation, time of supply, place of supply, input tax credit. What are the positions taken by the taxpayer with respect to these 5 areas? Whether the auditor finds that he is able to agree with it or not. For example, table number 14, most have opted out of giving this breakup. Table number 14 in 9C, oh, it is too complicated, I will not provide this information. Whether only cases where credit is claimed I should provide information, or cases where credit is not claimed also I have to provide information. I have not maintained information where I have taken credit. How will I maintain information where I have not taken certain credit? Therefore, I will not give table 14. That is one telltale sign in GSTR 9C. Another is, if you look at the way in part 5 of 9C, that is auditor's recommendation, what would have been table number 17, where the auditor has said that in respect of the unreconciled items, my opinion is that it is taxable or it is not taxable. Considering that there are matters like this, an auditor would be someone who has made extensive disclosures bordering on qualification, sometimes even disclaimer as to the tax positions taken, because the auditor does not have authorship of the tax positions. The taxpayer has authorship. But then again, if a taxpayer, when the experienced, knowledgeable chartered accountant is unable to be accountable for the tax positions, obviously the auditor cannot assume that the taxpayer is more knowledgeable. So where the taxpayer has taken expert opinion to entertain a aggressive or advantageous tax position, the auditor may know that because there is a advantageous interpretation attempted, there is a possibility of a opposite view to be canvassed by the authorities. Such areas, tax auditors would have certainly made a disclosure. The disclosure may have been subtle or explicit. The disclosure may be with a quantification or without a quantification. Whatever our essays guide the chartered accountant, according to the guidance, chartered accountants would not have omitted to make a disclosure suitably. The disclosures made in Part B itself can, if it's well understood, itself can give rise to questions. What questions need to be asked? We'll take a couple of examples and touch upon some of those issues so that we will identify what is it that may exist in a return. For example, 17.2, 17.5 reversals, how it has been done. Nothing is mentioned in table 7 regarding reversal. So obviously we assume that all the reversals have already been carried out in 3B. I don't think all auditors and all members listening in this afternoon session can confidently say that all their clients have perfectly complied with Rule 42, Rule 43 throughout the 9 months of 17-18. If there have been areas of concern, how they have been addressed, whether any concern has been left unaddressed, taking one or the other tax position may need to be disclosed. So therefore 17.1, 17.5. I don't want to go into 17.5, C and D or H, etc., because today is not the occasion for that. So reversals may be an area where some disclosure may be warranted. Another area where disclosure may become necessary is non-monetary transactions, transactions with non-monetary consideration, whether it is treated as a supply and credit taken and output tax paid, or not as a supply and input credit reversed, or nothing and input credit also retained. Suitably, the auditor may have already made a disclosure. Another aspect is regarding Columbia Asia. Regarding cross charge, whether any tax position has been taken, auditor is happy with it, not happy with it, he feels no need to mention it, or he needs to make a mention, or he needs to make a mention that nothing needs to be mentioned. Suitably, the auditor would have made some disclosure. Another aspect is interest. You know, the debate about Section 50 has been raging and still not resolved. For 17-18, what has been done? Have you relied upon retroactivity of this amendment and said that tax has been discharged on the net tax only, interest has been discharged on the net tax only? That should have been disclosed, because the law as it stands still says gross tax. You have relied upon the council's resolution, you have relied upon court judgments. Disclosure, 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 because I know auditors are firmly of the belief work done, not documented, is work not done. Therefore, we would have made very clear disclosures as to the source of any tax position and the author who has authorship of any tax position. Another aspect would be what happens to 16.4, how that has been interpreted. 16.4, time limit, credit taken, not taken. Credit taken, as you know, there's a small article also available on the website somewhere, that credit taken belatedly after removal of difficulty order number 2, credit taken belatedly when 16.4 was extended, the credit did not belong to 17-18. You know, credit does not time travel. Credit becomes credit of 18-19, even though the invoice may be dated 17-18, when it is taken subsequently, the credit does not travel back into 17-18 but remains in 18-19 to be utilized in 18-19. As you know, credit can be utilized only from the month in which it is taken in the returns and not for the period for which it may relate to. On this also some position may have been taken. The more the aggressive positions taken, the more would be the disclosures taken. The fewer aggressive positions, the disclosures would have been fewer, but table 9 will reveal all the compliance and discharge of the tax. So friends, please bear in mind, the auditor's report is a wealth of information for the simple reason that an intelligent knowledge worker has spent time till 7th of February 2020 analyzing and contemplating how he would like to disclose data of 17-18. And he has chosen to disclose it in this manner. When an auditor signs, he signs the zeros also. And therefore, he would have made suitable disclosure. So part B, I would believe, contains a lot of information, highly valuable information that the auditor will disclose. Friends, please keep in mind, Couple of aspects to mention here. The provisions under which the department takes action while scrutinizing the return, while it refers to section 61, please bear in mind 61 directs the proper officer that the explanation received, if it is not satisfactory, he needs to proceed with action under 65, 66, 67, 73, or 74. That is a topic for another discussion about what action department can take under which section. All that I want to submit for members to consider is, please bear in mind there is an extensive and an intelligent officer sitting on the other side, armed with data driven by the system for him to raise questions. The trouble is not that questions will be asked. The trouble is if we don't have answers to those questions. I thank the Institute for giving me this opportunity and all our members for your for taking time off this afternoon to allow me to share some of my learnings about what I would expect would come about in when returns filed for 17-18 are taken up for scrutiny. There are a few questions that have come in. I will take a couple of minutes to go over those and try and respond to some of them. If there are some questions, please feel free to send them here. Like I mentioned earlier, I would typically expect questions to be few because of the nature of this topic. We are not going to go into discussing input credits, input tax credit or supply and so on, scrutiny of the returns, how someone may discover issues based on what we ourselves have filed, and the consequences arising out of that are some. We will confine those questions to those topics. Very nice question by Mr. Allama Prabhu. Since this is the first year of filing GSTR 9, can we expect a relatively liberal, pardonable attitude from the department towards errors? Of course, not evasion schemes. Department also is learning from its mistakes. Can it expect 100% compliance? I'm sure this question he speaks for all our members. Definitely, we can expect liberal approach and not an aggressive and antagonistic approach from the department, clearly for the reason that is a new law. But please bear in mind, if we don't regularize and rectify, how can we claim to come forward with clean hands? We may have made a mistake. But are we continuing to remain with that mistake, probably hoping that we may get away with it? Then that shows bad faith on our part. If we come clean, I will also invite your attention to section 126(5). Very clearly, it says voluntary compliance is a mitigating factor. What is a mitigation for? For penalty and other consequences. So definitely we can expect liberal approach, but please let's not mix up. Liberal approach by the department is certainly not going to be a lethargic approach from the department. They are also eager to see what this new law can bring to the table. With another question from Mr. Vinayak, any dispute will be settled at first or second appellate authority? I would think that it's only an observation that disputes will be carried in appeal. That is a very reasonable statement to make, that there could be disputes and those disputes will be carried in appeal, because I'm sure Mr. Vinayak is aware of section 108 that it can set aside even favorable orders passed under 107 by the first appellate authority. So like I have said in other places, this GST law will get settled at the tribunal. Therefore, in order for issues to get settled, disputes are a absolute necessity. Whether the question from Mr. Sarthak Mittal, whether credit note, debit note pertaining to 1819 issued in 1920 to be reported in part 5 of GSTR 9. Our institute's handbook on annual return and reconciliation statement itself, I believe, says that stick to the date of the document. If the document is dated 1819, it will be reported in annual return of 1819. If the document is pertaining to 1819, reported in 1920, it will be reported in 1920 and not part 5 of GSTR 9. Hope I understood that question and therefore addressed that question. All right. Mr. Mukul Sringeri has this question. Sorry, before that, Mr. Tirupati Rao has a question. ITC wrongly availed and utilized in 1819 was reversed in August 19 and tax along with interest was paid through 3B of August 19. Where should it be shown in GSTR 9 of 1890? Please bear in mind, if it is, as you know, GSTR 9 will flow from the 1 and 3B that we have filed. Since the reversal has been reported in August 19, in 1819 data, it will not appear. Reversal, since you have already reported it, you are welcome to report this in part 5 of GSTR 9 relating to 1819. Next question is from Mr. Mukul Sringeri. What are the consequences of not filing annual returns as it was optional for 1718 and 1819? That notification, I think 47/19 very clearly said in a proviso, within the due date, those who are liable for filing annual returns, not audit cases, those who are liable for filing annual returns, if you filed the annual return within the due date, that will be accepted and proceeded. But if the due date has passed and annual return is not filed, annual return is deemed to be filed. The circular also after that, I think 129, that went on to explain that there is no occasion to file belated annual return by non-audit cases. Please bear in mind, as an outcome of this question, I just want to caution members, what annual return we filed, which is picked up for scrutiny, today we are discussing about what questions can arise out of it. Imagine what return we have not filed, deemed to be filed, questions will be asked. So therefore, please bear in mind, option of not filing return is not something that should be taken up with eagerness. All right, I think those were the main questions. I see some repetitions of questions. I want to submit to members a few aspects to consider as far as scrutiny of the returns. Very significant and important topics. When you receive any communication, please bear in mind, do not ignore, do not ignore, do not ignore. I know at the time of registration, email ID has been given of auditors, tax consultants, managing director, chairman, previous auditor. All sorts of experiments have taken place and misadventures have occurred. But please bear in mind, we need to set right what the correct address should be, the communication address, email address, mobile numbers, etc. Because as you know, GST law permits service by email, service on portal. When something is served electronically, we cannot claim that it was not served. So please bear in mind, we need to pay attention to that aspect, because once the lockdown is lifted, these proceedings may commence. So please make sure that you attended to those and not ignored it. There's a question from Mr. Rajesh. In 1718, IGST was paid instead of C&S. Can it be set off inter se? Can client have a benefit since it was first year of GST? We were all not aware of the rules of GST. I understand this was this is not the first instance, or number of taxpayers have had this issue. Since from the question it is clear that the wrong tax was paid, the right tax needed to be paid but not paid. So clearly the taxpayer in this instance has proceeded that it is possible to set off inter se. All right. So therefore, please expect a communication from the department challenging this suo motu interpretation that you have entertained, contrary to Section 77 of CGST Act and Section 19 of IGST Act. Whether set off is possible, the law does not permit set off, but you are asking for remedy of set off with the eyes of equity. I believe a suitably higher forum should entertain your request, and for that reason, this matter should get agitated to be carried to that appropriate forum. So please look at it from that point of view. Sections to refer in the context of communication received from department, please look at section 7512, where undisputed arrears, no need for any show cause notice under 73, 74, direct recovery action under 79, 75, 12, self-assessed tax, direct recovery. All right. Look at also 76, amount collected as tax is liable to be paid. Another provision to look at is section 160, subsection 1 says, as long as in substance the position taken in the notice is correct, technical errors can be set right. That is what section 160 subsection 1 says. So please note that. Section 160 subsection 2 makes a very important observation. If you come across any notice, warrant, or communication that is not lawfully served, please raise objections at the earliest opportunity. If you refrain from objecting or entertain such a communication on merits, then you cannot raise these objections at subsequent proceedings. So please be very careful. I would invite members to refer to 31/5/2018 circular issued by central government regarding the administrative discipline. It covers some part of the issues which were already covered in circular 1053 in central excise. Please make sure that the sections that we have not paid attention to, in GST, normally when you say let's discuss GST, we go directly to section 9, 7, 12, 13, 16. After that, we don't want anything else. But if you look at GST, I would encourage members to go back and refer to section 3, 4, 5, and 6. 3, 4, 5, and 6, and from 61 to 70, because these sections are going to be the mainstay once the scrutiny of returns is taken up. I thank all the members for your participation and the Institute for giving me this opportunity. Over to Chairman for
thank you
for the session. Thank you, sir.
Thank you, sir, for your wonderful presentation. Right now, the session is a 19th live webcast session handled by CA Jatin Christopher, sir, on expectation from scrutiny of GST annual return filed for 2017-18. The scrutiny, before scrutiny starting, all members has to be equipped well to understand the law and what is the implications. So in that process, the Bangalore branch has to work with this session. So on behalf of all the viewers, on behalf of managing committee of Bangalore branch, I wholeheartedly thank CA Jatin Christopher, sir. Thank you, sir. Thank you. I thank all the viewers for actively taking participation. Tomorrow we have a session on issues in supply and deemed supply by CA Raguraman, sir. Dear members, kindly note that as Nirmala Sitharaman announced, the due date is extension for income tax, but GST is our regular routine everyday task. So members have to be get ready. So we'll have more sessions on this topic from Jatin sir. So once again, I wholeheartedly thank for Jatin sir sharing his very valuable time with our members and for the Bangalore Bank. Next member, once again, wholeheartedly thank Jatin sir and all the members. I thank you for your active participation. Tomorrow, stay back at 4 p.m. Thank you, one and all.